What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. It really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, hit the subscribe button and the notification bell as well. That way you're alerted when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, we mostly identify triggers and targets for the next day and further out. Scalps and intraday trades all the way out to swings and leap trades as well. So if you want a deeper dive into exactly how we set up our charts, the trading levels, broadening formations, things of that nature, check out that bonus content on our YouTube page. It's got more information for you. And if you want a quick reference to the STRAT, which is the base of our trading and charting method, make sure you check out the description of this video. There's a link to a free quick reference PDF for you. So I do encourage you to watch the full video. We do go over triggers and targets, but we go over all time frames and give some pretty good insight. So with that, let's go ahead and take a look at the agenda for today. First, we're going to recap the price action from Monday, January 26th. Then we'll zoom out like we always do and take a look at the week, month, quarter, and year price action. Finally, we will zoom back in, set our 4-hour markers, and then the triggers and targets for Tuesday, January 27th. And we'll also do a quick review of the triggers and targets for the week, month, quarter, and year. So let's go ahead and get over to the chart. There we go. If we look at the 5-minute, starting on the 5-minute like we always do, this is how we can take advantage of our proven and repeatable strategy to either get quick scalps early in the morning or to get early entries into trades that are for trending days that we're going to sit in for a whole day, maybe even overnight swings. The general rule that we go by, or the base of the trading method, is looking for higher lows at or above opening print to get into calls, and looking for lower highs at or below opening print to get into puts. So we can see here today, pretty flat day overall. If we look at the, make this a little bigger for everybody. We've got the previous high a day up here at 63.36, overnight high here at 61.60, opening print was 60.75, previous low a day was 60.15, and overnight low was 59.40. Now the reason why we bring up previous high a day, overnight high, previous low a day, overnight low, is those are our targets, right? If we get calls, we're looking to get hit our first target at overnight high and second target at previous high a day. If we're going to the downside, then the first target would be previous low a day and then overnight low as the second target. And you can see that we got, it started out with a 2 down in comparison to Friday's close. So let's go ahead and get that back off the screen. So we did take 2 down, but we went 2 up and then 2 down again briefly to make what looked to be a lower high right here. So looked like we might get some downward action. And we were actually pretty close to buying some calls here, but it just buying puts with the lower high below opening print, but it really just flashed pretty quickly. So we really didn't have anything lined up to just pull the trigger on. We were obviously trying to watch where things were going, but it went down and up so fast enough that we just stayed out of the puts, or I guess we're too slow for the puts, but we did end up grabbing some calls at the once we broke higher, looking at possibly the fake out at the opening print level to go down, but an actual bounce. So we did enter here. We went higher, lower high on the 5-minute. If we take higher high on the 5-minute, and that gave us this broadening formation. Let me just make it a little bit easier here. All right. So now we've gone from, you can see these orange lines. That's a broadening formation that was now formed on the 5-minute, right? We went from low to lower low, then to higher high. So now we're kind of like, okay, we've got to watch this a little bit closer, because we could just have a sideways day, which we ended up doing, right? We had this 1-hour downtrend line coming through here that we ended up rejecting off of, and getting in this downward push back to the opening print. Excuse me. Pushed up, got the lower high, made a lower low, but just barely. So that could have also been a fake out here to get basically into puts when we just barely went lower low, right? Obviously went lower high. If you entered here and got the lower low, you're thinking, okay, we're in good shape, even though it closed back within above that low, but then it just reversed, and we're right at that opening print level. So at that point we just kind of held on to what we had. Obviously they're contracts for next week. We don't buy same week contracts, which gives us a little bit more wiggle room. And once we saw that we went back and made a higher high after the lower low, again, another broadening formation. So there's that and there's that, but this time noticing that it is more skewed to the upside, right? The bottom broadening formation is pretty flat, and it's running along this 100% fib extension of the holiday bull flag breakout. So it is finding support here, which we found as positive, right? And then came down. Looks like we've got support on opening print. Came back down, bounced off of it again, and looked like, okay, we're starting to break through this hourly downtrend once again. We pushed up, and we got to overnight high, or almost to overnight high. That's actually kind of funny because we let me make this bigger. I keep forgetting sometimes people are on phone. We actually got kind of lucky here, right? So we had half of our positions set to sell at overnight high just due to the sideways action here. And then if we pull up the internals, let's just make this bigger here. If we look at the internals, the tick just running across the zero line the whole time. Vol QD even below the zero line, but still just basically running across the zero line the whole time. 80 QD, yeah, it was above, fell back below, but then ended up just basically riding the zero line, right? Nowhere near trend higher or trend lower zone. That's 1500, negative 1500. We're nowhere close to that, and so we just had to keep in mind that it's not looking like we're going to have a trending day here. Let's go ahead and make sure that we capitalize on any profits that we can capitalize on. And here it wasn't any even profits, right? It was just like, let's get out even. I think it was like minimal gain. We had a limit sell up here to sell at around the 6160 level. We actually got pretty lucky because it filled on this wick. I expected us to have to hit 6160 or break it before it sold, but I guess the spread got large enough that the contracts did get taken for us. So I don't think it was like minimal profit, if at all, but I'm pretty sure it was break even. But then we got this lower low followed by the lower high, and we just said, if we go lower than the low of this lower high here, then we'll go ahead and get out the rest of the position. We ended up doing that a couple candles later, and then just watching things kind of fall into the opening print level again. So nothing really there for bears or bulls. Now, if you were quick scalping, there was definitely some things you could get there. If you wanted to look at this 3 candle towards the beginning of the day, 15 minutes into the day, if you wanted to count that as your higher low. And well, no, actually that's what we did. There wasn't really, because you had to wait till you cleared here, and which was real close to over high. So I guess you could have took this lower high here, and taken that put back down to opening print, maybe see if you could get back through there. But yeah, unless you were doing something quick today, wasn't really any full day trade to get into or anything like that. So kind of a typical Monday. We tried to trade Mondays, but we as opposed to Fridays, we don't try to trade that much on Fridays. Maybe a one and done in the morning, or maybe something that might last for the morning, but we like to get to our weekend kind of early. We put in a lot of hard work during the day, so Fridays we don't try and trade too much. On Mondays we're looking for the trades, but we just notice going back through our notes and our journaling, there doesn't happen to be as much trading that we get into on Monday, or for big profits on Mondays. So every once in a while you will, especially if you swing something over the weekend, monthly contract or something like that, you might get a big pop on a Monday. But intraday, it can be a little bit tougher with SOXL. So that was today. Let's go ahead and zoom out a little bit. Let's look at the 1 hour real quick, because we are still in this let's get a better chart, in this hourly downtrend, right? No matter how you want to cut it, if you're counting this bullish bearish engulfing candle as a lower high, right? We're right there at the downtrend line. if you want to, take that as a lower high and then take it to this lower high, still under a downtrend line. So that the hour chart is still in a downtrend. It's it's flattening out. Obviously, we're not getting much lower lows than the previous lows, so it seems to be flattening out. And that was where we found some initial support late last week with the pop. I'm sorry, the week before with the pop. If we look to the left just a little bit, right? But we still got this gap down below that we haven't filled. We've got this 4-hour broadening formation that, if we bounced off of this one, you would think that we might come back down to hit the other one to just expand or broaden the trading range for SOXL, maybe and fill that gap, right? That kind of coincides with this gap here. If we were to fill the gap, hit this 4-hour broadening, maybe get a bounce at that point. If that does happen, however, we do need to keep in mind that would make us go 2 down on the week. If you look at this short dash purple line right here at the top of the gap, that is last week's low. So that would be going 2 down on the week. Now, again, it's coming from a higher high on the week, so it's not like we're starting a downtrend or anything like that. It could be actually a nice little pullback to get better entries to go out longer again. But we do look like we kind of peaked out with that little pop there and kind of slowly fading away. We'll have to see what happens tomorrow. This week has got a lot of catalysts, a lot of economic numbers being released every morning this week. FOMC, we've got big tech earnings. So, it's kind of not surprising that today was sideways. People kind of just sitting in anticipation of what may happen throughout the week, especially with the tech earnings. So, one thing I will say is chips did underperform big tech. So, that does show that people are kind of moving their money over into other areas outside of chips, but still in tech for their movements this week. So we'll see. Still a decent expected move on the week by the market makers for SOXL. So again, just got to have a little bit of patience. On the 4-hour, yes, we did put in a soft lower high. Make this bigger for everybody to see it. So with the first 4-hour candle of today's price action, we put in this bullish engulfing candle. So that is, what we consider to be a soft high. We like we like 2 ups to be highs, right? Like this candle or this candle. But and the same is in reverse for the downside. We hold this as a soft lower low, but in terms of the trend on the 4-hour, we're still in the uptrend, but we have a lot of room to pull back, right? We can still get down to the top of this gap before we make a lower low on the 4-hour. So a solid lower low, that is. So keep in mind, we're still just in a little pullback on this 4-hour. Same with the day. Look on the day. Let's get a better chart here for everybody. Right, again, 2 down. Following Friday's 2 down, but the low that we have to worry about from last week is again at the top of that gap. So if we can bounce before the top of the gap, then obviously we're not making a lower low. But if we do make a lower low, again we're coming from a higher high in the candle structure. So at that point, it's only creating a broadening formation, right? So if the next candles were to come down and maybe hit the market maker's expected move low before bouncing or moving sideways, we would have this, broadening formation to there and this broadening formation there, just showing that price is, taking some time to digest the move up that we had, this big move that we had from 35 all the way up to 66, right? That's almost doubling. So, here's that holiday bull flag. Here's the breakout from that holiday bull flag right there. And we're up into the fib extensions of the holiday bull flag breakout, right? Retesting these fib extensions from the April bull flag, right? So we hit that 200 fib extension right here. And we're just kind of pulling back. Also, this monthly broadening formation right here. So, not unexpected, but also not the end of the world that we are having this pullback. We look at it from the week perspective. Zoom out a little bit more. Again, higher high. So, if we were to go 2 down on the week, We could come all the way down to the soft higher low at what's this 4201, or this solid higher low here at 3570. Right, we've got all that room that we can pull back to make a higher low. Would not be surprised at all if we come back to this $50 level and test what was this previous area of resistance. Right, last year's high, 46.79 was the big 46.79 to 50 was the big area of resistance for 2025. Right, we tested it multiple times, and were rejected every time. Popped above it a couple times, but ended up getting pulled back below. So if we can turn what was resistance into support, it just furthers the bull thesis there. Let's go ahead and remove these. All right, let's take a look at the month. Not too much to say here that we haven't been saying over the past few days, right? Higher low, higher high. We're in an uptrend on the month. Not much else to say. Now the 70.08 would look to be, the equal high here from this drop that we had in 2024, which plays into the quarter, because that is the magnitude of this one combo 2 down, combo 2 up strat reversal, right? So the 1 2 down 2 up is the magnitude is not the high of the one, but the candle to the left of the one. That's that 70.08 that we've been talking about for a while, which again plays into the year. And we've got this 2 down 2 up reversal, again targeting this 70.08, which is the high of the candle to the left of the 2 down in that strat reversal. So 70.08 remains that key number out there for us. Let's go ahead and take a look at, let's get the right chart up. Look at tomorrow's action, right? We want to set up, there we go. Set up for, being able to use our proven and repeatable strategy in the morning to try and capitalize a little bit better than we did today. Obviously today was not a bad day by any means, but no profit. Nobody likes to come away with no profit, right? You can always see the silver lining. It's better than losing money, but we're in this to make profit. So coming out a day flat, we'll see what happens coming week with all these catalysts. Is probably going to be a pretty just volatile week. Some pops in the morning from earnings report either overnight or in the morning, and then maybe fades throughout the day as we get economic numbers or the FOMC meeting minute or decision, things of that nature. Just look for some more volatility this week, right? Now, as far as the proven and repeatable strategy, again, we're just looking for higher lows at or above opening print to get into calls, and we're looking for lower highs at or below opening print to get into puts. So we've got previous high a day at 61.96 up here at the top of the chart, previous low a day at 59.60 at the bottom of the chart. We don't know where overnight high and overnight low will be by the time we open tomorrow. So for right now, we'll just say that overnight low is 60.08, overnight high is 61.68. And then let's get the right tool out here. Let's say we open towards, the upper end of the overnight range, right? If we open here and we get a push up, maybe a little rejection off of overnight high, then we'll get a pullback, but then the higher low at or above this opening print level, we want to look to get into calls. Overnight high probably not going to be our first target, right? Unless you get some type of reversal right at the opening print level. Even if you do, and even if you're in the money with multiple contracts, a 40 cent move isn't the largest move. So, you can take some profits there, but the better target at that point would probably be that 61.96. But of course, watch your internals, QQQ internals, and just price action in general to see, if we're hitting this overnight high and with no momentum, no follow through, then maybe you do need to go ahead and just take profit or break even there, because we may not see that 61.96 previous high a day. On the same breath, if we open here and we push down, maybe we get a bounce off of the week's opening print, which is 60.75, and then we push back up, but we get some type of lower high at or below the opening print level. We want to look to get into puts. More magnitude, obviously, to the downside with this particular setup. Your first target would be overnight low. Second target would be previous low a day. Keep in mind, though, we do have the week's opening print 60.75 and 60.42 that will probably, and then the 60.42, which is the 100% fib extension of the holiday bull flag breakout. Those will probably act as some support. So just watch as we come down. You may need to go ahead and take profits here, especially if you got a good entry. It may be a good choice to scale out a little bit here if we start to slow down at that 60.42 level. Leave some runners for in case we do end up breaking through and going down to that overnight low and previous low a day. All right. So that's what we have for just from scalping perspective, or just getting an early entry early in the morning into a longer trending day trade. That's looking for the opening print and then looking to see whether we get higher lows or lower highs at or above or at or below that opening print. Higher lows at or above the opening print, we get calls. Lower highs at or below opening print, we get puts. All right. Let's know from the scalp perspective. Let's go on out to the 4-hour chart and take a look at what we might do for. Let's get the right chart up here. What we might do for a little bit longer day trade, maybe a full day trade, possibly even overnight swing trade. Right. We can see that on the 4-hour chart on Monday we had a 3 or bullish engulfing candle for the first 4-hour candle, followed by an inside candle or a 1 for the second 4-hour candle. So what that means to me is big indecision, little indecision. Big indecision, a 3 is essentially a broadening formation from a candle to candle structure, right? It's went higher than the previous candle's high, but also went lower than the previous candle's low. So you could say, here's a little broadening formation just on the 4-hour chart. All right. So we could see action to the upside or downside, right? We had big indecision. Bulls tried to push it up. Bears tried to push it down. We ended up closing it towards the middle. And then the next 4-hour candle, we didn't really go anywhere. Bulls couldn't make any headway. Bears couldn't make any headway. So we just closed again. So big decision, big indecision, little indecision is how I look at Monday's price action from the 4-hour perspective. If we do in that first 4-hour candle on Tuesday, if we go 2 down, that gives us this 3-1 2 down continuation to the downside, entering at the low of the 1, exiting at the low of the 3. So the low of the 1 is 60.59, the low of the 3 is 59.60. So about $1 worth of movement there. If you got contracts at the money, in the money, you can make some pretty decent profit off of that little move alone. To the upside, again, not as much magnitude. We would enter at the high of the 1 and exit at the high of the 3 for the 3-1-2 reversal. Also kind of comes into play with last week's 50% level. We talk about this every week. How we react at that 50% level is usually a pretty good indicator as to what will happen for the rest of the week. So if we come up into this last week's 50% level and just move sideways, the rest of the week might move sideways just with all that volatility that we were talking about. Overall sideways, intraday, you may have big swings, but when it comes to close price to close price, we may just have, kind of a flat week. Now, if we break through this last week's 50% level and we push with some momentum, maybe we get a little bit of a pullback, we get a higher low at or above that 50% level, then we should probably go and test the last week's high by the end of the week. Again, if we push up to last week's 50% level and just immediately reject and have a violent reaction to the downside, we're probably going to retest last week's low, if not close that gap. So just pay attention to, even if we do get that upside activity in that first 4-hour candle of Tuesday's price action, watch that last week's 50% level and see how we react there. If we scroll out a little bit more to the day chart, right? Remember I said big indecision, little indecision on the 4-hour time frame. That's basically what we got on the full day's time frame when we zoom out to that level, right? Just indecision, a doji. Yes, we did press down in comparison to the previous candle's low, but not that much. And we still pressed back up to close as a doji. So another indecision indicator. Now, if we continue to the downside, that continues this combo 2 up, combo 2 down, STRAT reversal, magnitude being the high of the gap, right? So you would enter at the previous day's low, and your exit would be what's this? Thursdays. What's it? So it's Monday, Friday, Thursday, Wednesday, Tuesday. So Tuesday's low, Tuesday of last week's low would be your magnitude for that move if we go 2 down on the day tomorrow. Now, if we go 2 up on the day and pull this 2 down, 2 up reversal, the magnitude for that move is the high of the candle to the left of the 2 down. So what's this? 63.36 would be the high for that move. So once we break above previous high a day, again, watch how we need to fight through that monthly broadening formation in last week's 50% level. But if we are able to fight through, the magnitude for that move is the high of this candle. Now, if we breach the high of this candle, that puts us in this combo 2 down, 2 up situation, with the magnitude of that move being the high of last week. But remember, we've got that 200 fib extension. Let me make this a little bit brighter for. We've got that 200 fib extension at 65.04 of that April low bull flag, right? So, if we do pass the 2 up, 2 down magnitude for the initial 2 up, 2 down, don't get too far ahead of your skis thinking that we're going to get all the way up to last week's high. We're going to have this $65 level to contend with and try and break through as well. All right. So let's go ahead and look at the notes. That way we can put some numbers with the charts that we've been talking about. So for Tuesday, January 27th, there will be 235 trading days left in the year. The close price on Monday, January 26th, was $60.70. The opening print, or the first traded price for the week of January 30th, was $60.75. And you can see we closed below that, meaning the week is red. So the week goes green at $60.75. But we do know that the month, quarter, and year are all green. It would take getting down to 43.13 to turn all of those red. We know the expected move for the week is plus or minus $7.35 from Friday's close, giving us a range of $68.95 to $54.25. If you're not familiar with that expected move, make sure you check out the weekend video or the Thursday night videos where we go over the expected move for Friday. We don't have any gaps above, and we do remember where our gaps are below because we have them here handy at the top of our notes as well. We know from a scalping perspective or an early entry perspective into a day trade, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. We talked about on the 4-hour time chart, if we go to the downside with that first 4-hour candle, that will give us a 3-1-2 down continuation, triggering at 60.59 with a magnitude of 59.60. So again, about $1 worth of movement there, not too bad. And then we have, if we get past 59.60, an extended target of 58.72. To the upside, we would have a 3-1-2 up reversal, triggering at 61.57 with a magnitude of 61.96. So not a lot of magnitude there, but we do have the 62.48 as an extended target for you on the 4-hour time frame. On the day chart, if we go, if we break below that 59.60 level, that triggers a combo 2 up, combo 2 down. The magnitude for that move is about $2.50, or a little less than $2.50, with a magnitude of 57.22. And then we have extended targets of 56.33, which is half gap or halfway through the gap, as well as 55.44 as the gap close. If you're not familiar with a half gap, a lot of times intraday, at least with the initial push into the gap as well, a lot of times the halfway point of that gap can be a bounce point. A lot of times just to retest where the top of that gap was, to make sure that the bears are still in control and reject off of that level, or it will bounce out of there at least intraday, and then maybe later on in the day or the next day it will go to finish closing the gap. So that's why we keep that half gap as an extended target out there. But ultimately, you would be looking for a full gap close at 55.44. To the upside on the day chart, we would have a 2 down, 2 up, triggering at 61.96, and the magnitude for that move would be 63.36, with an extended target of 65.04, which is that 200 fib extension of the April low bull flag, and then a final extended target of 66.96, which would be the completion of the 2 down combo 2 up reversal, which would take you to last week's high. All right, we'll stay here. We'll go back to the charts at this point. On the week, we have not triggered the 2 up or 2 down yet, right? We'd have to get below 57.22 to trigger the 2 down, which would trigger a 2 up, 2 down with a magnitude of 52.35. So about a $5 move on that for that magnitude. So it could be some pretty decent money there. extended targets listed out for you too as well if we get past that 52.35 with momentum. If we do go to the upside, that just gives us another two up continuation at 66.96. No magnitude for that move just because it's a continuation and not a reversal. But we do have the extended targets of 68.95, 70.08 is that other key level. And then if we get past there, we do have the 73.15 before the ultimate or the all-time high of 74.21. From the month perspective, we have already triggered this 2-1-2 up at 59.08. Again, we set November as a higher low on the month chart, and we've gone higher than October's high, giving us a higher low, higher high, starting off an uptrend in the on the month chart. We've hit a couple of our extended targets here, but we do have the other ones listed out for us. On the quarter, we triggered the 1 combo 2 down, combo 2 up. We continued it at 50.76. We initially triggered at 36.15 in the fourth quarter of 2025, but we've continued that here in this first quarter, going above 50.76, which was the fourth quarter's high. And we do have some targets here listed out for us here on the way to the ultimate magnitude of 70.08. Now, once we reach 70.08, again, we're getting into all-time high territory, blue sky territory at that point, and we've got some extended targets out here listed out here for you with that. And then on the year, we have already triggered the 2 down, 2 up at 50.76. The magnitude for that move again is that 70.08 number, and once we get past that, we have that all-time high of 74.21, and then blue sky territory from there. All right, so there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. I hope everybody has enjoyed this video. We tried to jam in as much information as possible without taking up too much of your time. So, as this is a free video, we don't have any membership fees or anything like that. If you made it this far, it would really mean a lot to us if you can give us a thumbs up. It's free on your part, but it really goes a long way to help the channel. And we just want to be able to spread this information to as many people as possible and help make trading a little bit easier for some folks out there. So along with the thumbs up, if you give it a share, maybe you know somebody that this might help. Again, this concept is not just for SOXL. This channel happens to focus on SOXL. It's a very I don't want to say easy. It's a ticker that you can make a decent amount of money from each day due to the higher beta on that ticker. But this method can be used with any ticker on any time frame. It extrapolates out on all time frames. So again, a free thumbs up would go a long way to help the channel, maybe even a share. But we'll go ahead and close the video at this point. Close it up like we always do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this Tuesday morning or Tuesday throughout the day, we hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.